Okay, everybody, here we go. The freaking madness continues. But you and I knew this already. We actually called it, and we're going to talk about that in just a moment. So here we go. This is my post-market wrap-up on this Friday. We made it through another week, June 30th, 2023. Let's start off with this. We're seeing yet again, it's an incredible phenomenon that repeats itself over and over and over again. It's incredible to see. I'm referring to this action here in the debt market, the 10-year yield, the MMRI, the relative strength of the dollar. They will not allow the MMRI to touch or market risk to get above 250 every single time for months and months and months and months that we start seeing risk in the market rise, 10-year yield rising, relative strength of the dollar stronger. A miracle happens. It's just like the sky opens up and some divine power comes down and starts suppressing rates yet again. It happened again today. We watched the 10-year yield drop 5 basis points, dollar on a relative strength basis drop, MMRI come down. It's incredible. It's incredible to see this. Look, this is one entity and one entity only that has this kind of firepower to buy enough debt to make rates drop. Meanwhile, yields drop. Meanwhile, central banks are supposedly in the fight of their lives. You know they are because they're saying it. Uh, to raise rates to do something about inflation, which continues to rise around the world. Okay, how many of you believe, even for a nanosecond, that this is just coincidence? It's just coincidence, really? This just continues to go on, and gargoyles and things and creatures and ghouls and Lex Luthors running the entire show, freaks sitting behind the Resolute desk. Are you kidding me? Really? This is what we have. This is what we pay taxes for. Everything else? Are you kidding me? Someone, please, honestly. Perry, thank you. Thank all of you. Lava Girl, look at this. All my friends are here. Magic Mika, Sprinkler Man, everybody. Alan Greenspan is here. Holy Lord. Anyway, so, I'm sitting here, probably just like you, watching the 10-year yield, watching the MMRI go down, watching the stock market surge higher. We got a rally across the board today, especially in tech. On the back of this, again, this mechanism, how this works. By the Fed and central banks keeping rates suppressed, it keeps a doorway open for cash to make its way into the stock market. It's so disconnected. The stock market is so disconnected from any kind of reality. I mean, it seems like we're stuck in an old paradigm. What am I talking about? Bad economic news, which doesn't stop. Round after round after round of bad economic news pushes the stock market higher. We've seen this before. This is not new, but it is currently in full force right now. A lot of this is fear of missing out. A lot of this is, the hyping of Apple, now $3 trillion market cap, the hyping of AI, and that's why tech is taking off here. It's an incredible thing to see. It really, really is an incredible thing to see, but it is. It's right in our freaking face. Now, the real thing that's going on here, and you and I started to see this from months ago with, credit card companies offering you, many of you wrote to me, how the credit card companies are offering, hey, you know what? We're going to increase your credit line. People are maxed out right now, and consumer spending off of their own data from today has hit a wall. Now, why does that matter? With regard to the economy, let's just forget the stock market because it's disconnected from anything right now. If you do your own research on this, I mean, open up another search engine if you want to, but the economy here in the United States is 70% dependent on consumers spending and spending and borrowing and spending and spending. Right now, the consumer is done. Again, the phenomenon of debt defaults skyrocketing here like we've never seen. The higher than the Great Recession, that people maxed out repossessions, homes, cars, and everything else. All right, this is part of it. But now that, honestly, and this is again by their own numbers, consumer spending is just dead. It's now hit a wall. And we're getting warnings from major corporations saying, hey, you know something here? Moving forward, earnings probably aren't going to be so hot because the consumer is hurting. We've been hearing from bellwethers saying, hey, look, you know what? We can't pass on prices to our consumers anymore, higher prices, because they're maxed out. But it just doesn't stop. But this is all stuff that you and I have covered repeatedly over and over again for months. So this is no surprise to anybody that follows this blog. We look, like I've been telling you and all of us here, we are so far ahead of the curve on all this. It's frightening. It's the truth. And we know it's going to happen because we know who the players are. We know what they want to do. And it's central banks. They are involved right now in a mission to own it all, while they continue to pressure the consumer, sell lies to the public, how they're raising rates so they want to control inflation, which continues to rise. We get warnings of catastrophe. I mean, I can't get this out of my head from yesterday. Out of the Federal Reserve's own mouth, they're warning of catastrophe, their word, for small businesses that are getting wiped out to fulfill the corporate agenda. How long have you and I been talking about this? It's unfreaking believable. Anyway. This is not doom and gloom at all, Fatso, whatever your name is, Fatso Stock Talks. This is about understanding what's going on here and doing something about it. If you're scared, I'm so scared I can't listen to Greg. Well, that's your own problem. Sounds like a personal issue. But you should be taking action here, begging us to get debt, becoming your own central bank, understanding what's going on. I understand there's a lot of people that are afraid, like the fat person, whatever his name was. It's okay to be afraid. Go suck your thumb somewhere. That's okay. You're allowed to do that too, at least in this kind of a environment. Maybe you relate to a cat as well. I don't know what you do in this kind of world, but that's okay. Anyway, let's go back to this market. Market took off today. 10-year yield come down. Relative strength of the dollar lower. Gold and silver catching a bed. Cryptocurrencies, especially Bitcoin Cash and Litecoin, I mean, surging today, like 25% respectively. It's incredible. Crude oil getting a bit higher. Imagine your shock. Imagine my shock here. That's just the situation here. It's just completely nuts. Now, a couple of other things, and this is what I want. This is something else I want to bring to your attention. So if you're flipping channels like I do, paying attention to Bloomberg and Fox Business and CNBC, they all get the same script at the same time. So they're talking about today, especially how the U.S. economy is expected to grow at 2% sometime very, very, very soon. Meanwhile, their own numbers from like today tell us that inflation, by their numbers, I mean, and this has no bearing on reality, is 4%. So we have inflation surging ahead at 4%, and then maybe sometime in the future, our economy will be expanding at 2%. So how does that add up to an expansion of anything? How about it doesn't? But you see, they got to try to convince you that that's exactly what's going on. Again, the stock market is its own entity right now, and there's honestly no way to trade it other than continuing to be long. Most of you have been long with me, JEPI, for a very long time. I continue to add to that position, and I will continue to add to it until the meltdown in the debt market happens. It doesn't look like it's going to be allowed to occur for a while. Why? We're in an election cycle. We got Bidenstein touting how inflation is coming down, which it isn't, and we got Bidenstein telling us that people are earning more money, which they're not. Real wages are down for 25 consecutive months, but he can't tell you that. No, he can't tell you that. Make it up. Make any of this stuff up. So what do you think about this? I mean, just what I just touched on. That again, we can look forward to the economy eventually growing at 2%, but according to their own numbers, I mean, we're way more than. How many of you believe their numbers that the inflation rate is 4%? 4%, really? How about it's like 40%? But I mean, I'm exaggerating here, but it's way more than 4%. But that's what they're going to sell you. They're going to tell you this. They're going to distract you, deceive you. That's what they do. This is a freak show, and you all know it. Anyway, let me just I was writing stuff down. I got 2 pages of stuff here. I just wanted to cover with you. But the main thing I want you, I mean, does it make sense to you that, again, consumer spending hitting a wall? All of these warnings from these corporations here. People are getting strangled to death. They really are. Mitch, thank you. Thanks a lot. People are suffering. People are hurting here, and they have no voice. They have no one to cry out to. Because, again, it's the central banks, in this case, the Fed here in the United States, that continues to pressure the middle class, that is telling us straight out of their mouths that they are killing small businesses here in favor of the corporate agenda. I mean, that's what this is all about. And you got the cheerleading squad here, CNBC especially. I mean, CNBC takes the cake with the $3 trillion market cap for Apple. $3 trillion. All that tells me is Apple is charging us way more for their products than they're actually worth. Can I please get a duh here? I mean, make it up. Make any of this stuff up. I dare you. I really, really do. I was just writing here that market, no connection to reality at all. It seems like, again, it's FOMO or fear of missing out. This promise of an AI boom, the fueling of obviously a even larger stock market hyper bubble on the back of suppressed rates, but the Fed's raising rates at the same time. How does that work? Okay, this unbelievably inverted yield curve. We have never seen this before in history. The yield curve that we have right now, every single leading economic indicator, all of them. There's not one leading economic indicator today that is pointing towards anything good coming down the pipe. Nothing. I'm just telling you the truth. You don't believe me? Look it up for yourself. It's that simple, honestly. Anyway, people, that's that. But there is a little bit of good news here. You want to hear the good news? I'll tell you what the good news is. Monday, we have a shortened trading day. Tuesday, this market is actually closed for July 4th. So we get a little time off here. You know, I'll be honest with you. I could use a little time off. This thing really, it plays on my mind. I mean, I start sweating. My heart starts pounding. You know, my skin starts tingling. It's kind of crazy, but that's the truth. So we're going to have a little bit of a longer weekend. Now, before I close this for the week here, thanks again, Mitch. Let's address some of these questions here. October crash incoming chat. You know what? Don't forget about market crashes. Okay, we don't get pullbacks. We don't get corrections. The technical indicators for the stock market, you can throw them away at this point. They don't matter anymore. It's all about suppressed rates, fear of missing out, and distortions like we have never seen before in the history of the world. And this is the truth with regard to assets. I mean, when you have a situation, you all know this already, but I'm just going to elaborate. When you have a debt market hyperbubble like we have, and this is the monster, the financial monster of all time, when you have this kind of a situation, and it's creating malinvestment cash moving into the stock market, it shouldn't be going in there right now. The economy in free fall around the world, not just here. You know, it's just, this whole thing doesn't make sense anymore at all. The market just goes higher and higher and higher. And the worse the economic news comes in, it seems, especially as of late, and it's something we've been seeing for years with easy money, the market just continues to go higher. Again, it's generally in a real market, you have corrections, you have pullbacks, and these present buying opportunities for people generally. But now it's just a free-for-all on an unprecedented scale. Thanks again, Mitch. But I think most of you here know what I'm talking about, especially my trader friends, my lions out here. It's just, exactly. It's a casino, Mickey on a scale that is beyond anyone, my or probably anyone's wildest dreams. I mean, nothing gets in the way of this market. And again, if you're looking at risk, I personally believe this. I mean, and you're all entitled to your own opinion. Casino Royale, exactly. The MMRI, the Mannarino Market Risk Indicator, free to everyone on this planet, link in the description of this video, is the best risk indicator we have. There's not another one. And we can see, especially lately, how it's been performing. I mean, we know where the first line in the sand is. It's 250. Every time we've hit 250, the market gets very, very unhappy about it. Believe me, the Fed knows that too. I don't know if the Fed's watching the MMRI, probably not, but they're watching the 10-year yield, they're watching relative strength of the dollar. I just happen to take this thing and put it into a little neat equation, which allows us to quantify risk. I hope you take advantage of that. But again, gauging from where what we're seeing here, the market seems pretty darn okay with risk in this market, according to the MMRI, as long as it's below 250. It's just crazy. It kind of is like a tachometer, Jeff Rowe. It's an interesting thing to watch. It really is, to me at least. And when I was watching the 10-year yield drop today, I'm laughing. I'm like, look at this. We knew it. We called it right here. And it's exactly what happens. Let's see what they pull off moving. And next week is going to be interesting. Like I said, shortened trading day Monday, no trading at all Tuesday. So then we really got Wednesday, Thursday, Friday. We'll see where this whole thing goes here. I wouldn't be so, look, let's just go out on a limb. And for my markets, a look ahead. I'm not going to do it Sunday because, again, we have a half a day trading on Monday. I will do my markets a look ahead on the 4th. So I hope you all tune into my markets a look ahead segment there. And we got each other's backs, people. We'll get through this. I don't care what they do. They can throw anything at us. We got each other, and that's the most important thing. Now, I know for a fact that we can do better than this with regard to thumbs up. Almost 1,000 people here, only 336 thumbs up. Thank you, Bitcoin Buffalo. No, it's not me that's awesome. It's you guys and you girls that are awesome here. I'm just a dude out here trying to, this just keeps me sane. I watch this stuff. I relay this stuff to all of you. And I'm preaching to the choir. I know all of you here, especially those of you in my base, all of you who are here every day for my live stream, you get it. You know what's going on. Even Jerome Powell. Where is Lord Humongous? Lord Humongous is awesome. Where is Lord? Is he here? Lord Humongous. Come on, man. Chime in. Where is he? No, I am not a national treasure. You're all national. I am just a dude here just trying to make sense of the unsensible or whatever. You haven't seen him, right? Perry, hope Lord Humongous is okay. Anyway, yeah, Joey Socks, another one who's not here. All my lovely friends. All right, anyway, people, this is Friday. So we're going to do what we always do. Once in a blue moon, I forget to do this, and I hate it, all right? But we're going to do it right now together, all right? Love each other. Care about each other. Be charitable. If we can just do these three things, we could change the world, regardless of the new world order, corporate agenda, central bank run world government. Three things. We could change the world, honestly. And it should always start with us. Don't you agree? It's got to start with someone. So it should start with you and me. Yeah, Scott. Yeah, he's here. Anyway, I'm talking about Jerome Powell. Mitch, thanks again, man. You're all awesome. I love you all from the heart. I mean that. And I love to see that you guys really do care about each other. Look at this. Look at Perry. Perry's telling you, love you all. Peace out. This is what I'm talking about. All the stuff that we talk about all week. It's fun. It's exciting. But, man, if we could just really honestly just love each other and care about each other and have each other's backs, and, that's it. I really believe that we can change the world, not through Bidenomics. Bidenomics is killing us all. I think we're pretty clear on that. Maybe we should be called like liar economics, because what came out of its mouth the other day, I detest that man. I can't look at him. I can't hear him. But I detest him even more so. He's trying to sell more lies and propaganda to everyone. I'm going to call this. But just remember those three things I covered with you, all right? We're out of here. I'm out of here. I will see all of you when? Remember? Tuesday from my market. I need a few days off. I'm not going to lie. I need to regroup. I need to get my head back on here because this stuff makes me crazy from time to time. And I want to thank all of you again for being with me. Because if it weren't for you, I think my head would blow off. All right. Love you a lot. See you Tuesday. Have a fantastic next couple of days, all of you. And that's all. I'm out of here.